Welcome to SB News Podcast. We look at the fundamental aspect of the economy and its impact on the Forex future and the stock market. Any opinions expressed here are for information purposes and must not be taken as investment advice. Along with earnings from Starbucks, Pfizer, and Uber, corporations like Apple, Amazon, and Alibaba will also be reporting their second quarter earnings this week. The earnings season has been encouraging thus far, suggesting that recession fears may have been unfounded and that we may be moving towards a soft landing. This week's JOLTS job vacancies report, which is anticipated to be released on Tuesday, will provide a clearer picture of the economy. With a healthy job market, the unemployment rate has remained close to a historic low, with the unemployment rate hovering around 3.6% since March 2022. The U.S. job market has remained extremely tight despite the increase in interest rates. On Thursday, the unemployment claims print is anticipated to provide a clearer picture of the number of unemployment claims that were filed in the previous month. It will show whether companies are willing to keep workers, and if any concerns about a slowing economy remain. Extra scrutiny will be paid to July's data, since this will be an indicator of a further rise or pause in interest rates moving forward. Unemployment in the last three reports has come below forecast, signaling market optimism despite the Federal Reserve interest rate increases. Rate statements from the Reserve Bank of Australia and the Bank of England are anticipated to be released this week. The RBA is anticipated to raise interest by 25 basis points in line with the general trend. Even though the interest rate was held steady at 4.1% when it was announced in July, a 25-point increase might be required to get inflation to the RBA's desired level. The Bank of England is anticipated to raise its interest rate by 25 basis points on Thursday. With inflation currently at around 7%, a quarter-point increase is required by the BOE in order to manage inflation, and a 50% increase rather than a 25 basis point increase is not out of the question. The BOE's decision on quantitative tightening will also be a key topic this coming week. The Monetary Policy Committee decided to take £88 billion out of the stockpile of gilts kept in the Asset Purchase Facility in September 2022. The annual review of quantitative tightening is likely to be completed by the Monetary Policy Committee, and it will also determine the rate of reduction in gilt. With interest rates hovering around 5% and inflation hovering around 7%, according to Dave Ramsden, Deputy Governor for Markets and Banking at the Bank of England, it might be time to accelerate the reduction of gilts. Statistics on Canada's unemployment are anticipated on Friday. Given that the rate has consistently stayed at a range for some time, it is quite likely that unemployment will stay at or near 3.6%. Although a 25,000 gain in fresh hires is anticipated in July, this is fewer compared to the 60,000 additions in June. The slowing of wage growth is evidence that the rise in the labor market is not keeping up with the rate at which people are entering labor market each year. You are listening to SB News. Please subscribe, like and download our podcast. It helps us bring more contents like this to you. Fundamental analysis of economy for Forex, future and stock market.